Welcome back to my channel. My name is Patrick and today I'm going to share with you a H1 scalping strategy, the one that I use to become a profitable trader. And in return, all I ask is you hit the like button, hit the subscribe button to show support for this channel. It's a very simple strategy, so it's great for beginners or anyone who works a 9 to 5. So let's jump over to charts and I'll show you exactly what I'm talking about.
So on the H1 here, as I said, this is a strategy I did use to become profitable. When I learned how to trade supply and demand, I started on the higher time frame, which is quite unorthodox actually, but it is what I did, and it's quite useful because on the lower time frames, I'll show you a quick example. On the lower time frames here, there's a lot of information, so it's quite hard to digest. It's quite hard to find the correct zones and so on. So having a look at all this, it's for beginners very hard to know how to draw accurate supply and demand zone. So there's a supply here. How do you draw that accurately? Do you draw it from, I'll show you quickly. So do you draw it from the top here to that bottom there, which is what I will do. Yeah, that's our supply zone. Or do you draw it to that bottom there? Or do you draw it to that bottom there? It's very difficult with all this information to know accurately what the appropriate box is or the zone for to trade, right? So, however, on the H1, it's a lot easier. So normally I do trade on the M5, as you know if you've watched my videos. For those who haven't, I normally trade on M5 and I'm scalping moves and I'm taking it for 5 to 10 pips, right? So it's what I actually learned when I backtested H1 is what works best for me. You know, I'm not guaranteed, but I have a very high probability of winning my trades when I take 5 to 10 pips, smaller moves, one trade a day, and keep it nice and simple, right? So on H1 is where I learned. So as you can see, it's the same kind of price action. This all choppy consolidation, stuff like that. And we are looking for the same thing. We're looking for consolidation, then a break from consolidation, okay? So what I mean by that is this. When price is just going sideways, that's price being agreed, that's consolidation. And then we're looking for a break from consolidation. So we're on the H1 now. I'm going to show you how I would trade this move here, right? So we've got our consolidation here and we've got our aggressive buying. So that tells me that, you know, the big institutions are interested in this price area, okay? So when price gets back to that area, that's when I want to be a buyer and I want to take it for a quick move because I don't know how long it will last. You know, it could just go 10 pips, it could go 100 pips. There's no guarantee. So what I tend to do is just go for 10 pips because it's a lot easier to get. So what I'm going to do now, I'm going to show you exactly how to trade this move. So this is my demand zone here. I will draw out this box here, and this is where I'm looking to take my entry. So some people, with regards to the entry, people tend to take either aggressive entries or confirmation. So confirmation would be when when price enters back into this zone, which is over here, they will see some kind of candle print or formation to confirm that price wants to move up. I prefer taking my moves based on an aggressive entry. I'm not waiting for a candle print because what I'm looking for is a quick reaction and that could come and go so quickly. There's no time for a candle print. Yeah. So we are looking to enter here and we're going to go to M5 on the lower time frame to see how it worked out in a second because you can't actually see it on H1 here. So in terms of risk to reward, most of these moves you're going to probably be risking more than your guarantee or you're trying to win, yeah, and that's true for scalping. It's the nature of scalping. Scalpers know in most cases you're lucky to get a one-to-one. In this case here, because I'm going for only 10 pips and I'm risking 18 pips, it's a negative risk to reward ratio. But however, it is a high win rate. It's a high win or probability trade. So I'm quite happy to risk 18 pips to get 10 pips. That's not a lot to risk, yeah? So in terms of risk management, I tend to only use 1% of the risk. So I need to do calculations. So 18 pips, 1% of my account, And then in terms of where are we? In terms of my entry is there. In terms of my stop loss, sorry, it's just below this box here. So that's what I mean by I'm risking 18 pips, because my entry is there and my stop loss is just underneath. So in this case, it's about 20 pips. So it's actually a 2-to-1 risk to reward, negative risk reward ratio, that is. So let's go to the M5 now, show you how this played out. So M5 on January the 5th. Just scroll over quickly. Okay, so 4th of January, here we are. So here's our, okay, so that's our actual, let's just zoom out, easy if we do that. Okay, here we are. So it's January the 6th we're looking for. That's when price reaches our demand zone. Nope, not January the 6th either. There it goes. January the 5th. Let's zoom in. So let's see what happens when price entered this demand zone for the first time. So as you can see there, as soon as it touched that demand zone, it reacted. And that's exactly what we're looking for, a quick reaction. So straight away off the back, that's 11 pips. So that works perfectly for what my objective is, 10 pips. So that works. I back tested this a lot of times, so I know that works. 10 pips is very realistic when you're trading this way. So that works for me. 5 pips, very easy. So I could take most setups like this and bag 5 pips quite easily. All right, so that's that move. I'm going to look for another one. So again, what we're looking for, aggressive buying, aggressive selling. There is aggressive selling here, but I just don't like that setup because it's not clear where the base is. So I'm gonna keep moving, and I think there's one. Okay, so there's one here I like, not this one. This one here. So we've got consolidation here. It pumps it up and breaks it down to the. So we're looking here at a supply zone. Very aggressive selling here, right? So I'll draw out my zone. So the top of this wick here, and I'm looking to enter just about here. And where is it? So I'm looking to enter in this supply zone here. So when price enters there, and we can see straight away what happened. So when price entered it for the first time here, you can see what happened there. That was 18 pips reaction. I could go to the M5 and show you exactly that price reacted immediately, but I don't want to lose my positioning again. I'll just show you another example quickly and we keep it moving. So here's another one here. Show you another demand. What was that? The 28th? So where were we last? So here's one here. Let me just use this same box here. Okay, so we have demand here. We have a demand set up here. And so what I'm looking at is here. So from that wick low to that wick high in this instance, well, the zone could be anywhere here, but I'm looking to trade there. Hold on, not there, there. I do have a way of finding these zones or finding my entries, and I think I'll leave that for another video. I'll probably go into more detail. This is just an overview really to show you what we're looking at and it's a reminder to myself because this is what I'm going back to in terms of trading. I'm going to go to H1 to trade now because I'm focusing more on trading less. So I'm trying to find only one trade a day. I'm looking for quality setups and stay out of all of this, choppy price action beforehand, which you can get lost in when you're on the M5. So here you could see clearly we have a base candle here and an imbalance here. So price was not agreed in this balance in this candle here. So we know somewhere here at some point here price was not agreed. So if I zoom down to, actually I will zoom down to M5. Let me just mark out my potential entry quickly. I'm going to go down to M5 now. And what was the date on that? Okay, so here we are. So I'll show you what that looks like on M5. So as you can see, it's not as clean when you look on the M5. Look, there's a lot of price action here. For me, this is quite simple to read because that's the imbalance there. That's the candle that created the demand. And you can see what happens when it reached the price return there, it reacted straight away. But on the M5, you can see there's a lot of information to digest, whereas on H1, it's a lot easier. So let's look what happened over here when price returned to our zone. So roughly about here is our entry. So aggressive entry, entering here, our first reaction, 7 pips. Later gives us 10 pips, draws us down and gives us a lot more. So that's about 20 pips, and I'm sure if I zoom out it's a lot more as well. Yeah, so from that demand zone holds and it goes all the way up to 42 pips. So sometimes it can go 100 pips, sometimes it only goes 10 pips, sometimes it only goes 6 pips. So sometimes I will scalp it for 5 pips depending on the quality of the move, and in most cases I will scalp it on 10 pips. Now how I trade this is, so that's the entries, that's the stop losses, that's the stop underneath here, that's the entry. How I tend to trade this passively is by setting up a pending order. So I don't really trade off my laptop, so I'm not going to go through that process right now. But to set up a pending order, you place your order here, and so when price reaches it, you'll tag you in. You automatically set your stop loss and so on, and you just leave it. Now I know this works because I've done it myself, but I've also shown my younger brother how to do this, and he's a complete novice. He just learnt what a pip was and so on, and he was able to pass the 5%ers level 1 in the first try because he stuck to this strategy because this was the only thing he knew, which is quite advantageous, because if this is the only way you know to trade and it's a high probability win rate, you're gonna do well. So this is a reminder to myself, this is a reminder to him. So this is how we trade this on the H1, and that's it. Very simple. I hope you appreciated that. This is the end of the video. I'm gonna wrap it up there. If you did appreciate it, you know what to do. Hit the like button, hit the subscribe button, show your support, and I try to keep bringing out these videos to you as often as I can. If you do have any questions in terms of TP, in terms of stop losses, risk reward, and so on, how to calculate your risk in terms of the lot allocations and so on, how to calculate 1% risk and so on, hit me up in the comment section. I'll try to get back to you as soon as possible, or if there's a lot of demand for it, I will do a video and show you exactly how I did that. So this is like a quick overview how to trade on the H1. Hope you appreciated it, and I'm going to wrap it up there. This is Patrick signing out. Until next time, peace.